Thank you, everyone, for joining us for episode 10 of the Money Coach Show. I know we've been on a bit of a hiatus. You're missing Tara right now as she's gallivanting along, the nation. And you know what? Again, we've been off for a month because right before the holidays, we like to take vacation. And you know what? We want to make sure that you guys can feel this comfortable with inside of your pocketbook so you can be able to do that. That's one of the many reasons why we've created the Money Coach Show is so you guys can have the cheat sheet to your financial well-being, making sure that you understand what your mortgage is doing. If you're not a mortgage owner right now, that you can make sure you're well equipped going into that. We have our financial guru, Damien, making sure that he's giving you the topics you need to know to understand, your financial investments, that vehicle, making sure it's the fastest vehicle you can have with inside of your money market accounts or anything else like that. So you're armed and dangerous. So first and foremost, Damien, how have you been, my friend?
I've been good. Like you said, a little bit of vacation. I was in the northeastern part of Spain for a little bit, Catalunya. Sorry.
Uh,
Vallobrega, Ayafranc, few other little small kind of little towns and villages. Beautiful. Absolutely beautiful. Was on the
Wonderful.
beach quite a bit. So yeah, sorry we've been on a bit of a hiatus, everybody. Just vacation calls. And everybody needs to recharge those batteries, like Robert was saying.
Yep.
So, but
And
yeah, no, it's been
uh,
good, man. It's been good out here in Spain, bro.
good, good. And you know what? Sorry, but not sorry, because you know what? Again, when you work hard and you understand your financial investments, this is what you're supposed to do with them. It's like you can't take your money with you, let accumulate it so you can enjoy it while you have it. Exactly. So I'm going to go ahead and we're going to go through some information today. I'm going to give you a quick market update. There's a lot going on. A lot has happened within the past month, with the rates and everything else, and a lot of information for you to digest. And you know what? That's what we're going to be able to do here. We're going to forego mortgage 101 information for the next episode because next episode I'm just going to give you a prelude of what's happening and what we're going to be talking about. It's going to be processing and underwriting and a little bit more financial guru understanding. But today, what I really want to hit on is the Fed. They on last week on Wednesday, it was a huge day, not the election, but a huge day with inside their rates. Excuse me, Jerome Powell lowered the rates by 25 basis points, so we're in that 4.75 to 5% range. Uh, Again, much like we had spoken about before September, that these lenders have already baked in that cut with the inside of their rates. They already baked it in, so I'm going to say it, you're going to hear me like a broken record. If you can afford the home now, get into it because and Damien, before we go into that market report or before we go into the financial guru report, we can talk a little bit about what rates are doing because when we were reading over, we go through a lot of publications, we do the work so you don't have to, but we'll provide links for you so you can understand it. We go through Forbes, we go through Wall Street Journal. Today I'm going to be primarily extrapolating just the high key points from Bloomberg because you know what, the analysts listened to what was being said from the Fed, and hey, before they said we're going to have another rate cut December 18th, possibly. Now, again, if you can afford to get in now, get in now. Don't wait until, oh, what's the rate going to be? Because they're already baked in. And the analysts are saying, hey, you know what? It was at an 80% chance that they were going to do another, possibly 25% basis point cut. Then they said, you know what? There's about a 20% doubt on what they're going to do. So it's down to a 60% possibility that they're going to be cutting rates even further. And you know what? As I like to say, if you see that it's going to be raining outside and it's 60%, you don't need that big winter coat. You can throw on a light jacket and go outside. With that being said, get that home now because I'm going to show you a quick graph that we go over with our clients, making sure that they understand what their key points could be, what the possibility could be. So as you can see, I'm using Optimal Blue as my pivot point to understand what the rates are and how we can navigate you to getting the best rate possible. And you know what? Again, it's not even the best rate possible. It's making sure you can qualify for the home that you want to get right now, so you can start building equity. Because at the end of the day, That's what this show is all about, is understanding what your mortgage is. When you can get into it, awesome. And I have three different graphs right here. This purple one right here just says what the average closing was for an FHA loan. And you know what? This is a past month. I'm doing it at a month target, and you can see it's been pretty stagnant. FHA closing average for yesterday was a 6.42. And you know what? For those people with, hey, that great credit, we're seeing it at, 6.786. That's awesome. If you don't have that great credit, but it's still good credit, you're going to see it's at 6.926. And you know what? This is why we've created this. And if you go back a few episodes, by all means, that you'll see on our YouTube page, there's a great way to understand how to get the best credit possible, how to repair your credit, because again, that's going to be the demographic that's going to tell you what your interest rate's going to be. Yes, it's going to be down payment. Yes, it's going to be the property that you're purchasing. But ultimately, both of those rely on what your credit score is. And this is that graph here. So we want to make sure that you guys have an understanding. Reach out to us at Loan and Key. Our information will be down below in the description. So you can always make sure, hey, contact us. We love talking shop. You know what? As I was on vacation, I wasn't gallivanting in Spain, but I was here on the East Coast, is where my home base is, and checking it out, taking my daughters out to view some awesome things. I'm a homesteader somewhat, and I wanted to make sure some certain things are taken care of, and I have the opportunity to do that. But again, when people call and say, hey, I have some information, I want to talk about this, I will pick up, we will send emails, we will correspond with you to making sure that you're armed and dangerous. So you know what? I will yield, because I know that that's enough blabbing, but again, the blabbing is good, because you know what? I'm going to say it again. If you can afford to get into your home now that you want, with how the money that you have for a down payment, the closing costs, with the interest that they're currently at, get in. Don't wait for the best interest rate, because property is still going to go up unless there's a major devastating crash in the market. Then you're going to see, it's not going to be a 2008. I haven't seen that since 2008. You're not going to see anything crazy like that. Again, you're not going to see rates go down to, 2.78% again. You're just not, and I'm being realistic with you. I don't have a crystal ball, but I'm using common sense here, and foreknowledge of what we've seen in the market. And I was telling Damien a few minutes ago, you don't want to lose half your butt cheek looking for the best interest rate to saying, oh yeah, I'm going to wait for the best interest rate, because that half a butt cheek's going to come with the cost of the home that you can no longer afford, because that went up. We hear a lot of these little short videos saying, oh yeah, if interest rates go down, then you can afford this much more home. But why pay that much more home? Get into the home now at whatever the interest rate may be. Then when the interest rates get
Marry
lower,
the home. Don't marry the rate. You marry the
exactly.
home. You don't marry the rate.
Damien, I'm so glad you brought that up, because that is my favorite saying, is marry the home, not the rate. You're making memories in that home. So with that said, I'm going to yield back, because Damien, I know you have tons of information for us. So let's hear it, my friend.
Yeah, no. Hello everybody. So today we are going to be covering what is a prospectus. A prospectus is something, whether you have a 401k, whether you have an IRA, a Roth IRA, any kind of investments that we've covered in the previous episode, between 401ks and IRAs. A prospectus is essentially what tells you about the investment. Normally, a prospectus will have 10 key points. When I look at a prospectus, though, there are three major points that I focus on. It's not to say that the other 7 points are not important. That's not what I'm trying to really convey. What I'm really trying to convey is that most people don't even understand even something as simple as a mutual fund and an index fund. Robert, I know you understand the difference between that. Um, so, what's the difference between a mutual fund and an index fund, Robert?
All right. Well, you know what? From my notes here, because you know what? I'm always taking notes, because this is valuable information. The index fund, much like a 401k, they're not actively worked the way a mutual fund is.
Bingo.
Those mutual funds, you're going to pay a little bit more higher of costs, but that's the most
Bingo.
aggressive way you can get money back. Correct?
So perfect, perfect, Robert. Perfect. Just ding, 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 ding. So with that said, winner, winner, chicken dinner. You read a prospectus because it gives you a detail of what's going on. There's about 10 key points, but I said the three major points that I usually focus on are its performance. Every prospectus will give you normally a graph, a really simple graph. Some mutual funds have been open for 7 years, some 15, some even as long as 20. All of that performance has to be displayed to you. That's what I look for, number one. Number two, fees and expenses. The prospectus will tell you what kind of fees and expenses that they will charge. Mutual funds charge a lot more fees and expenses than index funds and 401ks, normally because they take more risk. There are management fees to be paid, like Robert was saying, they're actively managed. So a mutual fund, when you read that prospectus, you'll usually tend to see that there'll be more fees and expenses with a prospectus like that because it's being actively managed. And the third thing I look for is what is going on in that fund. The prospectus will tell you this is where they have the amount of stocks or bonds. They have 60% stocks, 40% bonds, or maybe 80% stocks, 20% bonds. They talk about it, the holding by weight or the allocation. And so those are the three things that I always focus on. Why? It cuts right to the chase. It cuts right to the chase because you're already able to get an idea of, okay, so I know right off the bat how well this pool of money has been performing. I know, number two, how much it would cost me to be involved with if I wanted to put $2,500 or $10,000. They give you a breakdown on their fees. And the last one that I focus on is the fact that I want to see where they're investing. I am always looking for a double-digit return. I tell Robert we're in our 40s, and a lot of people that are out there in their 50s and even in their 60s still, they're still having their portfolios being really, really compiled of mid-aggressive and aggressives. And it's not super dangerous. I realized 20 years ago, the advice would be, hey, once you hit your mid 50s, you need to go to totally conservative funds and you need to really, really draw back the volatility. No, you don't. In my opinion, no, you don't. And that's not what I've seen through other analysts, through performance, through the markets, and through my own performance, as well as family and other clients. You don't have to be that conservative. Those are the three issues that I focus. Now, the other seven issues, they are your investment objectives. That's number one. Number two, your investment strategies. Number three is your risk. All of these different things, they have a lot of importance. The three things that I tell you to focus on have, without a doubt, the largest bearing. It is performance, fees and expenses, and portfolio holdings. All of the other seven really don't have the same amount of importance because depending upon what you're trying to do with your retirement, whether you're trying to retire in 10 years, 20 years, whether you have kids, all of these things are extremely important because you are not going to be able to achieve your investment goals if you don't even know where you're at and how those three things that I just mentioned will impact you. So a prospectus explains those things to you. It gives it to you. I'm sorry. Go
Quick
ahead,
question,
Robert.
Damien. And
Yeah, yeah, yeah.
I'm only asking this subjectively because I kind of know the answer. But when it's a performance, let people know the aggregate that they're probably going to be looking at. Is it, 2 years, 3 year, 5 years? What's going to be the best?
On average, most funds have been around from anywhere from about 5 to 10 years. And remember, 2022 was a bad year. A lot of investors and people don't know about that. If you look at a fund and they didn't do too well in 2022, don't hold that against them. Okay. Everybody
Mhm.
did bad in 2022. So just have to caveat that because I am familiar with this. I know most laymen and most people don't know that, but they'll have a bad year. But 5 to 10 years is usually your average of where a fund has been open. They usually give you that performance. And that's why I tell you lead with performance. Just it's a simple graph and it lets you see what their returns were in what year. Some of them have amazing returns, double digit returns. Others don't have all that great of returns. And then they charge really large fees. So that's the
Mhm.
part where you have to do your homework. And that's where a prospectus, you read your prospectus, because that's how you do your homework when you want to try and invest in a really, really good, profitable, lucrative fund. Off my soapbox now, Robert. Go ahead, take it
No
away.
worries, no worries. And I just want to capitalize on what you just said because you know what, when you had helped me out with my 401ks, that was the key point that really opened my eyes up to understanding, oh, whoa, this is what I need to look at is that performance because that double digits, you know, Damien, he let the collar off the dog and, the tack dog myself went on it and, was able to understand with the very basic information that Damien just spelled out here, within my own 401ks to where, hey, within the past year, I saw some amazing returns, some really amazing returns where, I don't want to, it's obnoxious when people like to show this is how much I made, but it's confidence in knowing, wow, you know what? I made the right moves because before when I didn't do any moves, it was stagnant. It was a lame duck. Information that Damien's providing is stellar to making sure that my future investments, my current investments are, hey, like I mentioned earlier, it's the fastest vehicle, more bang for the buck, and it's getting me to my retirement destination a lot faster than what I had expected it to. Waiting for somebody else that's not going to actively work my fund. Why? If you have that 401k, you can do it yourself with the information provided here.
It's your cheat sheet. We always say it's your cheat sheet.
Yeah.
It is just your cheat sheet.
And we here at Loan and Key want to make sure that you guys have that cheat sheet to understanding financial freedom, with inside of your mortgage, with inside of your financial investments, whether it be mutual fund, whether it be an index fund, or whether it be your mortgage and equity that you have built up.
And as of today, Robert, my overall retirement has been performing at 16.12%, but one of my three major funds, 12 months, has been 32.72%. No joke. 32.72% has been my 12 months since October 18th, 2023. 32.72% has been my return on this fund. It's a mutual fund. It's a mutual fund. What we were talking about, mutual fund. But like when Robert was telling you about double digit returns, I'm just went on my app just to go ahead and make it as really, really relative and just cohesive. But yeah, those were my returns on mine. So that's all I have to say about that. Thank you so much, everybody. Like always, for tuning in. We love talking about this stuff. I hope that it helps you guys putting it down on your cheat sheet, understanding why a prospectus is important, why you the difference between an index fund and a 401k and a mutual fund. 401k and indexes are not really actively managed; they're passively managed. Mutual funds are actively managed. That's why they cost a little bit more, but you have lucrative returns. 32%, 32.72%. Anyways, that's all from the financial guru here, Robert. But yeah.
Awesome,
Uh,
awesome. Hey, you know what? Thank you, Damien, for providing that much needed information. Hey, and And we want to thank all of you guys for tuning in. I know it's some of these videos get kind of lengthy, but at the same time, it's information that you guys need to know. You know, we're going to be providing more content for you, making sure that you guys always are armed and dangerous with financial information. And you
We're
know
back
what?
from vacation. Sorry about that.
Oh yeah, no, no, no. Hey, it's totally fine. And then, hopefully next week we'll have Tara back, because hey, I know I'm growing my gray hair out here, and we need a fresh face on the TV on YouTube here on our channel, on our means of, content. So again, you guys have a great rest of your week. Make it profitable. And if you want to really make it profitable, contact us at Loan and Key. Talk to you
Loan
later,
and
my friends.
key. Loan and key.
Talk to you later.
Bye.